Hello everyone, it's Adit again from the Global Economic and Innovation Platform with the GAPE Daily News. Today I'd like to start by talking about some international business talking points, the latest international business talking points, which has been the trade tensions and their impact. Trade relations between the US and China have remained very strained, with the US imposing additional tariffs on Chinese goods and China retaliating with tariffs on US products like food and energy. This back and forth tariffs could raise costs for a lot of Chinese businesses operating in the US, affecting their investment decisions and profitability. For example, China's tariffs on US goods, such as a 15% levy on coal and liquefied natural gas, might disrupt supply chains for Chinese companies reliant on American imports, potentially impacting their international operations. However, on a bright point, it is enticing Chinese companies to rethink their strategy and also consider foreign direct investment in American markets in the US and setting up production in the United States of America. So that's something to watch out, and that's something that the Global Economic and Innovation Platform's partners are also focusing on to help Chinese businesses consider their options in investing directly in the United States of America. In other good news, there's been corporate expansion abroad, regardless of the tariffs and the ever-changing policies. A notable development is Chagi, a popular Chinese milk tea chain, receiving approval for a US listing. This move is planning to issue 64.7 million shares, either on NASDAQ or the New York Stock Exchange. So this shows that Chinese companies are actively seeking to expand globally, regardless of the current situation. And with over 6,000 stores worldwide and 2023 sales of 10.8 billion RMB, Chagi's expansion could inspire other Chinese companies to tap into the US capital markets, enhancing their international presence and investment opportunities. Also, there's been a growth in foreign asset investment. Chinese investors are increasingly looking abroad, as seen with the Q2 development of the mutual funds, which invest in foreign assets, growing nearly by 47% in 2024, which is about 611 billion yuan. This surge indicates a strong interest in international markets, driven by low confidence in domestic markets. So I think what this really means is that the Chinese investors are still diversifying their portfolios, potentially boosting investments in regions like Europe and Asia, which is another key area that the Global Economic and Innovation Platform operates in. We are actively looking to advise Chinese companies who are interested in taking their foreign direct investments in Western European markets. Finally, this has been a very positive trend, I would say. The Chinese outbound investment is still on the rise, with the firms increasing overseas assets by significant amounts, such as a record $71 billion jump in the second quarter of 2024. So this trend, particularly in sectors like electric vehicles, solar energy, could help ease trade tensions by creating jobs and economic growth in foreign markets, offering new avenues for Chinese businesses to invest abroad. That's all for the most latest news on the current trade tensions and current trade tensions. However, yet a quite positive twist for Chinese business and investment abroad, still showing a big rising and positive trajectory for Chinese businesses to consider investments abroad. All right, thank you, and I'll see you on the next episode of GAPE Daily with more exciting news and more latest news about Chinese investment, Chinese businesses, and their opportunities abroad.